Investing for beginners. I invested $35 every week for a year and made this. Have you ever looked at the world of investing and felt like it was an exclusive club, reserved only for those with mountains of money or advanced degrees in finance? Perhaps you've thought, I don't have thousands to start with, so why even bother? That feeling of being on the outside, watching others seemingly build immense wealth, can be incredibly frustrating. You want financial security, you dream of financial independence, but the path seems daunting, shrouded in complex jargon and high entry barriers. But what if I told you that the secret to significant financial growth isn't about starting with a fortune, but rather about starting consistently, even with a modest amount? What if I showed you, through a real, tangible example, how a commitment as simple as investing $35 every week for just 1 year could lead to surprising, encouraging results? Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Today, we're going to pull back the curtain on this exact scenario. We'll walk through my own journey of consistent, small investments and reveal the powerful outcome. This is about demystifying investing for beginners and showing you that the path to long-term wealth is truly accessible to everyone. The experiment, $35 a week and the power of consistency. Let's get straight to the heart of it. For a full year, without fail, I committed to taking just $35 every single week and putting it into an investment. That's a sum many of us might spend on a few coffees, a fast food meal, or a streaming service subscription. It doesn't feel like a lot of capital allocation, does it? Yet, the consistent act of making that small contribution, week after week, created a profound effect. Over the course of a year, 52 weeks multiplied by $35, that's a total of $1,820 invested. A respectable sum, certainly, but hardly a king's ransom. The key was not the size of each individual contribution, but the unwavering consistency of it. This isn't about trying to time the market, guessing when stocks will be low. It's about a disciplined, automated approach that bypasses emotional decision-making. So, what did I choose to invest in with my $35 each week? For a strategy like this, especially for investing for beginners, simplicity and broad diversification are paramount. I opted for a total stock market ETF. Remember, an exchange-traded fund, or ETF, is like a basket holding many different company stocks. A total stock market ETF holds thousands of companies, giving you instant exposure to the entire U.S. stock market. It's like owning a tiny piece of almost every major company in America, from the tech giants to the retail chains. This minimizes investment risk by not putting all your eggs in one basket. It's a low-cost, effective way to participate in the collective growth of the economy, a foundational pillar of any strong investment portfolio. The magic unveiled, dollar cost averaging, and what was made. Now for the exciting part. What happened after a year of consistent $35 weekly investments into that total stock market ETF? After 1 full year, the total value of my investment account, including the growth, was approximately $2,000 to $2,100. Think about that for a moment. I put in $1,820 of my own money. Through the power of the market, driven by the innovation and collective growth of those thousands of companies, that initial capital grew. This meant a gain of roughly $180 to $280 in just 1 year, purely from market appreciation on consistent small contributions. This is where the true power of dollar cost averaging shines through. Let me explain it simply. Imagine the market goes up and down like waves on the ocean. If you invest a lump sum all at once, you might hit a high wave and buy shares at their peak. But with dollar cost averaging, by investing a fixed amount of $35 every week, You buy more shares when prices are low, on the troughs of the waves, and fewer shares when prices are high on the peaks. Over time, this averages out your purchase price, often resulting in a lower average cost per share than if you tried to time the market perfectly. It removes the emotion, removes the guesswork, and allows the market's long-term upward trend to work in your favor. It's a disciplined approach to wealth accumulation. Beyond a year, the exponential power of compounding returns. While making a few $100s on an $1,820 investment in a single year might not seem like a fortune, this is where the picture gets truly vivid, and your hope for financial abundance can soar. The real magic isn't in that first year's gain. It's in what happens when you continue this strategy for 5 years, 10 years, 20 years, or more. This is the incredible force of compounding returns. Imagine those initial gains from the first year. Now they start earning their own returns. Your original $1,820 plus the $180 to $280 you made is now a larger sum, and that larger sum is what the market works on in year 2, then year 3, and so on. It's like a snowball rolling downhill. It starts small, but with every rotation, it picks up more snow, growing exponentially larger and faster as it gains momentum. Historically, the stock market, represented by indices like the S&P 500 or a total stock market ETF, has averaged returns of around 8% to 10% per year over long periods. While past performance is never a guarantee of future results, this historical trend is the foundation for long-term wealth creation. With consistent $35 weekly contributions maintained over decades, you could realistically see your small, consistent contributions grow into hundreds of thousands, or even millions, for your retirement planning. This is why personal finance experts consistently preach the virtues of starting early and staying consistent. It's your path to true financial independence. Your call to action. Starting your own financial journey today. So, how can you replicate this success and begin your own journey towards financial security? It's simpler than you think. Step 1. Open a brokerage account. You'll need an investment account. Many reputable online brokerage firms offer accounts with no minimum deposits and low or no trading fees. Look for platforms that are beginner-friendly and have resources for learning. Some even offer fractional shares, allowing you to invest small amounts into expensive stocks or ETFs. Step 2. Choose your investment vehicle. For beginners, I strongly recommend a low-cost total stock market ETF or a broad index fund. These automatically provide the diversification you need without requiring you to pick individual stocks. They offer excellent earning potential with lower investment risk compared to trying to beat the market. Step 3. Set up automated investments. This is crucial for consistency. Almost all brokerage accounts allow you to set up automatic weekly, bi-weekly, or monthly transfers from your bank account directly into your chosen ETF or fund. This takes the emotion out of it and ensures you stick to your plan, practicing dollar-cost averaging without even thinking about it. Step 4. Be patient and consistent. The market will have its ups and downs. There will be moments of excitement and moments of fear. The key to this strategy's success is patience and unwavering consistency. Do not pull your money out during downturns. In fact, downturns are when your fixed contribution buys more shares, setting you up for greater gains when the market recovers. Trust the process, trust the power of compounding over time. This is how you build long-term wealth. My friends, the journey to financial independence doesn't require a lottery win or a massive inheritance. It begins with a single step, a commitment to consistent action, even if that action feels small. Investing $35 every week for a year is more than just putting money aside. It's planting a seed that, with time and consistency, can grow into a mighty tree of financial abundance. It's about taking control of your financial future, one powerful, small step at a time. Call to action. If this real-life example sparked your interest and gave you hope for your own financial journey, please give this video a thumbs up. Your likes truly help us reach more individuals who are just starting their path to financial freedom. And if you haven't already, subscribe to our channel for more practical insights into personal finance and building long-term wealth. Most importantly, share your thoughts in the comments below. What's one small step you're ready to take towards your financial security today? We'd love to hear from you. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount to wealth accumulation.